Now that's not inflation, it's devaluation. Your dollar buys you less. And here's the key. That $37 trillion of debt, it's still $37 trillion on paper. But what does $37 trillion buy today versus what it bought in 2020?
At the Eastern Economic Forum, Anton Kobyakov, a man who has advised Vladimir Putin for over a decade, said that the U.S. is preparing to push the world into what he called a crypto cloud. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
So let's look at exactly what Russia is saying here. Back at the Eastern Economic Forum, again, Anton Kobyakov, and remember, this is Putin's senior economic advisor, right, for over a decade. Now, he's been in the room for every major Russian economic decision. He's laid out this theory. Again, he said the U.S. is trying to rewrite the rules of the gold and crypto markets. His exact words were that America's ultimate goal is to push the whole world into what he called the crypto cloud. Now think about that phrase, crypto cloud. He's saying once the world's money is digital, once it's in stable coins, once the U.S. moves its $37 trillion national debt into these digital assets, and then boom, devalues it, wipes the slate clean, while everyone else is holding the bag. But here's why this matters. This isn't just some conspiracy theory from our enemies, right? He's been architecting Russia's economic strategy since 2012. So when he speaks, it's not speculation. It's what Russia's leadership actually believes. And like I said, he's kind of right about devaluation. He's actually dead right. The U.S. absolutely plans to devalue the debt. Now, we've done it before. We've done it actually multiple times. But I think Russia just misunderstands it a little bit, right? They think we're going to create stable coins out of thin air like we print dollars. But that's not how stable coins work. It's actually way more powerful. So let me show you what's really happening. 1933, Executive Order 6102. President Roosevelt, he doesn't ask Congress. He doesn't negotiate. He signs one piece of paper, the executive order, and boom, confiscates America's gold at $20.67 per ounce. And then what happens? Overnight, he revalues it to $35 an ounce. Now, if you do the math, that's a 69% devaluation. One signature, 69% is gone. Think about what that means. You had $100 in savings, and now it buys you $31 worth of stuff. But the government's debt, they just got 69% cheaper to pay it back. Now, it's not the only time it's happened. It's happened many times since then. If we fast forward to 1971, President Richard Nixon closed the gold window. He basically rug pulled the entire world by removing the gold backing of US dollars. And since then, the dollar's lost 96% of its purchasing power. 96%. Again, 1985, the Plaza Accords. We had 5 countries get together and agree to, again, devalue the dollar by 25% in 2 years. And it worked. A 25% devaluation. It was coordinated, it was planned, it was executed. So when Russia says we're about to reset the system again, they're looking back at history, right? They see the pattern. They understand why it has to happen. Now, about every 40 to 50 year cycles, they see this coming due, and right now we're due. But what they're maybe not understanding so much is that we don't need gold confiscation this time, right? We don't need international agreements. We have a new mechanism, and it's already in motion. How do you devalue dollars when you're not on a gold standard? Well, it's simple, right? You just continue to expand the money supply. If we look at the M2 chart, just from January 2020, we had $15.5 trillion. Today, we have $21.9 trillion. That's a 40% expansion in just 4 years. 40% in 4 years. If we look at everything else, gas prices up 50%, home prices up 50%. The median home in America costs 50% more. Pretty interesting. Property insurance up 70%. Gold 35%. Bitcoin, it's up over 250%. See the pattern? When you create $6 trillion, new dollars out of thin air, but you don't create any new houses, you don't create any new oil, any new anything, right? Then the prices start to adjust. The dollars start chasing the same goods and prices go up. So your grocery bill, Food's up, right? 25 to 30%. Steak, milk, eggs, it's all up 30% plus. Now that's not inflation, it's devaluation. Your dollar buys you less. And here's the key. That $37 trillion of debt, it's still $37 trillion on paper. But what does $37 trillion buy today versus what it bought in 2020? It buys 40% less, right? The government just cut the real debt burden by 40% without paying back a single dollar, right? Without having to default, without having to negotiate with anybody. They just printed the way out. But here's the problem. The world, of course, sees this, right? It's not that China and Russia don't understand this. It's why China's dumping treasuries. It's why Japan's dumping treasuries. It's why foreign ownership of U.S. debt dropped from 34% to 23%. Sort of like when Nixon had to close the gold window. So the U.S. needs new buyers of debt. Cue it in, enter the stablecoins. Russia thinks we're going to print stablecoins like we print dollars. But of course, that's not how this works, right? Every USDT or every USDC, somebody has to deposit a real dollar to get back a stablecoin, right? It's a one-to-one peg or one-to-one backed. Now, the Genius Act that was just passed this year, it mandates every stablecoin must be backed by U.S. Treasuries or cash. No exceptions. Okay, so wait, if we can't print them, if every stablecoin needs a real dollar behind it, then how do we devalue the debt? Right? How does this actually help the U.S. government? This is the part maybe Russia doesn't seem to get, right? They're thinking about it just a little bit wrong. It's not about printing. It's about what those dollars are doing and where they're coming from. You see, when you give Tether a dollar, they don't just put it in a vault. They go buy U.S. Treasuries with it. When Circle gets a dollar, same thing. They go buy Treasuries with it. So this creates a perpetual demand for U.S. debt. Now, the more the stablecoins grow, the more the Treasuries they have to go buy. Right? It's automatic. It's built into the system. But that's just part one. The real trick is where those dollars are going to come from. And that's what I want to show you.
And foreign governments see it too. China and Japan are dumping U.S. treasuries. Foreign ownership of U.S. debt has dropped from 34% to 23%. Just like in 1971, foreign creditors don't want to hold the bag. So who's going to buy all the new debt?
If stablecoins need real dollars, how does this help the U.S.? Well, it's simple. Every stablecoin issuer has to buy treasuries. That's the law under the new Genius Act. You want to issue $1 billion in USDT? Well, you need $1 billion in T-bills. If you look at the numbers right now, Tether's holding $127 billion in U.S. treasuries. Circle holds $55 billion. Combined, they're the 18th largest holder of U.S. debt globally, bigger than Germany, bigger than South Korea. And where it starts to get interesting is Scott Bessent, he's the Trump's Treasury Secretary. He projects stablecoins to hit $3.7 trillion by 2030. China's been dumping treasuries down $1 trillion to $756 billion. Japan's selling. Foreign ownership dropped from 34% to 25%. But stablecoins, they have to buy it, right? It's required. Every dollar that goes into USDT or USDC becomes demand for U.S. debt. So that person in Argentina trying to escape inflation, they buy stablecoins, USDT. That business in Turkey avoiding the lira, they use USDC. They all become treasury buyers, right? They're funding the deficit without even knowing it. 3.7 trillion in guaranteed treasury demand. That's the plan. But here's the question. Where do all those dollars actually come from? Now, I made a video a few months ago where I talked about this. Let's go ahead and just play a clip. Let's check it out. We're talking about sterilized reserves. What we're talking about is that the Federal Reserve has given the banks a bunch of money, but they don't want the money to get into the economy because it would cause massive inflation. If you dump all this money into the economy and people go start spending it on vacations and trips and cars and going out to eat and things like that, the prices will rise. So what they've done is they pay the banks to leave it there, keep it out of circulation. That's why it's called sterilized. Sterilized reserves. Let me break down what that means. Now, right now, U.S. banks have $3.2 trillion sitting at the Fed, right? This is excess reserves. This is money that's been parked there since back in quantitative easing back in 2008 for 14 years. And it's kind of like dead money, right? It can't be lent, right? It's not in circulation. It just sits there earning IOER or interest on excess reserves. And that's about 0.5%. And here's the mechanism. The Genius Act says that banks can use these Fed deposits as stablecoin backing. They could take $1 billion in excess reserves, back $1 billion in stablecoins, and it's the same money, but now it's moving. 3.2 trillion, right? That's been frozen since 2008, but now it can start to enter the market. Not new money, the same money, but just moved, activated. Now, when the 3.2 trillion starts circulating, prices start to adjust, right? The dollar starts to weaken. The $37 trillion in debt, it starts to get devalued, but not through printing, through activation of reserves, right? That's maybe the part Russia seems to misunderstand, right? We're not creating more money. We're unleashing what's been trapped. Now, if we look back at the rest of the world and what they're doing, we can see that they understand this. Gold just hit $3,777 an ounce in September. This is an all-time high. Central banks are buying gold at the fastest pace since 1967. 4 straight years over 1,000 tons. I mean, think about this. 2022, 1,082 tons. That was the highest since 67. But then again, 2023, 1,037 tons. 2024, 1,045 tons. 2025, already sitting at 669 tons. That's just through Q3. Now, this is on pace for another 1,000-ton year. And who's buying? Well, everybody's buying, right? Poland bought 67 tons this year. They're the biggest buyer of 2025. The Czech Republic, they bought gold 29 straight months. They tripled their reserves since 2023. Turkey, 26 times consecutive months of buying. And China, well, they've added at least, 36 tons in 9 straight months. And that's just what they report, right? The real numbers probably double or triple that. These aren't gold bugs. These are central banks, right? These are the most conservative institutions on earth. And they're all doing the same thing, dumping dollars and buying gold. Why? Because, of course, they see what's coming, right? When Poland triples their gold reserves, they're not speculating on price, right? When Turkey buys for 26 straight months, they're not trading that, right? They're protecting themselves. The sterilized reserves, the 3.7 trillion in stablecoins, they see all that, right? They know the dollar's about to get devalued, and they're not going to wait around to hold the bag. That's why gold's at $3,700 an ounce, right? The world sees what's happening here. Now, what about Bitcoin? What about the strategic Bitcoin reserves everyone's talking about? Well, the reality is Scott Bessent, Treasury Secretary, he kind of killed it, right? He said, quote, no taxpayer dollars for Bitcoin. So the SBR bill, is it dead on arrival? Well, think about it this way. In 2022, the CHIPS Act, it passed. And the reason why is because the U.S. government needed semiconductors. But did they just go buy Intel stock? No. They gave Intel $50 billion in subsidies and grants, and then they took warrants. They took an equity position in Intel. It's the same playbook here. Look at this pattern here. Private innovation happens first, like SpaceX goes and builds the rockets, then NASA contracts them, right? Amazon goes and builds AWS, and then the CI uses the servers, right? We have the private sector takes the risk, and then the government is able to use or capture the value. So the strategic Bitcoin reserve, maybe it's not dead. Maybe it's just not happening the way you think. Maybe it was never going to work the way that you thought. Maybe we're already building the Bitcoin reserves through companies like MicroStrategy and Marathon and Riot and through the ETFs. Maybe the government just hasn't taken their cut yet. All right, but let's just bring this all full circle, right? Putin's advisor is right. We're going to devalue the debt, but not by printing stablecoins, by activating the 3.7 trillion in the sterilized reserves, by creating 3.7 trillion in treasury demand, by exporting the inflation globally. And when is this going to happen? Well, Scott Bessent said by 2030. But I think it's going to happen much faster. Stablecoins are growing rapidly. As a matter of fact, they grew 32% in just 7 months. So at that rate, we're going to hit 3.7 trillion by 2027. And of course, the world sees it coming. That's why gold's at $3,700 an ounce. That's why central banks bought 4,000 tons in 4 years. That's why China is buying gold and not U.S. Treasuries, right? The reset's happening. It's not an event, it's a process. All the pieces are being put into place right now. The Genius Act, it's already law. The reserves are already there. The mechanism's already in place. Okay, so what are you and I going to do about this? Well, simple. Sort of like the central banks, we don't hold cash. We don't hold U.S. dollars. We don't hold U.S. Treasuries. We don't hold fiat currency. We're holding hard assets. We're holding gold. We're holding Bitcoin, of course. Minerals like lithium, right? They've all been doing great. Real estate works. But of course, Bitcoin's my favorite because it moves the fastest when liquidity expands. It always has. The last major reset we saw was in 1971 when the dollar was rug pulled from gold. During that time, we saw gold go from $35 to $800 an ounce, 23 times. Bitcoin's doing that every 4 years. So plan your positions accordingly. And if you want to see exactly how Bitcoin correlates to stablecoin growth and global liquidity cycles,
while the US government hasn't directly bought Bitcoin, private companies and ETFs are already creating a de facto strategic Bitcoin reserve. MicroStrategy, Marathon, Riot, and spot Bitcoin ETFs are holding billions in BTC. The US doesn't need to buy it outright. It can capture value later through regulation, taxation, or equity stakes.